My 3 favorite setups using the Monday, Tuesday, Wednesday templates are going to start off this video by saying, well, thanks for interrupting. When broken down, the market can really only do 3 things: trend, reverse, or stay in a trading range. And it is consistently and constantly performing these same behaviors over and over and over again. In this video, I'm going to be reviewing every single Monday, Tuesday, Wednesday market maker template and providing you with all of the information that you need so that you can identify, plan, and execute these trades on a daily basis. Stick around to the end and wait for me to talk about which 2 setups I actually look for a Monday, Tuesday, Wednesday, and which ones are actually my favorite. I'm going to start off this video by saying, yes, this is a 100% of the time strategy. It works 100% of the time, but it's probably not what you think. 100% of the time, the market will break out in trend, it will break out in reverse, or it will stay inside of a trading range. That idea, that methodology, and that understanding applies to the 1-minute chart, 5-minute, 1 hour, 15-minute, 4 hour. It doesn't matter what time frame. There is going to be a high and a low. That could be a high and low of a 4-hour candle, a 1-hour candle. It could be in a high and low of the day, session, whatever it may be. There is a high and there is a low, and the market is either going to break out of that high and reverse, trend, or stay within that range. That concept is very important to understand for the rest of this video and any other future opening range videos, because at the end of the day, Monday is a high and a low. The range from Monday is a high and a low, and the rest of the week can early on be dictated just by Monday and Tuesday's price action. So if you do not have a good solid understanding of the opening range and a lot of the other tools that you can use, please go watch this video. It's linked right here. The link is in the description down below for this slideshow. You can turn it into a PDF, do whatever you'd like with it, but it is down there in the description. This is more for backtesting purposes and to get you all into the motion of the ocean and understanding how the week tends to flow. This is for simply a Monday, Tuesday, Wednesday template. The week is broke up into 2 sections: Monday, Tuesday, Wednesday, and then Wednesday, Thursday, Friday. You can look at those 2 blocks of days completely separate from one another and trade them accordingly with different rules and some different setups that you can look for within the week. That being said, I'm only looking at Monday, Tuesday, Wednesday in this video, but there will be a future video about Wednesday, Thursday, Friday. This first slide is a few questions that you can ask yourself prior to trading your session or just in looking at Monday and Tuesday coming into Wednesday, and you're trying to develop thesis or an idea about how to trade your session. This is some of the questions that you can ask. Did Monday or Tuesday close as an inside day? As we know, inside days has its own characteristics, its own properties of itself. Inside days, the understanding that is, if there's a breakout and that breakout fails of that inside day, there are stops at the other end of that inside day, and so the market could reverse and go back down to the stops. Or the market could break out of that inside day, pull back 3 pushes, and then continue to trend, typically for a measured move of that inside day. Number 2, did Tuesday's breakout fail? What I'm referring to here is you have a range Monday, and then Tuesday will either break out of that range and continue. Obviously, that's breakout and trend, or it'll break out and then the day will close back inside of Monday's range, closing as a failed breakout. Did Tuesday close outside of the opening range? So the other scenario from number 2, if it closed on the outside of Monday's high and low, then that is a confirmed breakout. Was there a first red day or a first green day on Tuesday? What I'm saying here is basically, was there a signal day? Inside day, first red day, first green day on Tuesday. That will give you very valuable information going into Wednesday. Coming into Wednesday, has there already been 3 levels of rise or fall from the low of the week or from the high of the week? That could indicate a reversal throughout the week or potentially even on Wednesday. Also, what I have noticed is that once there are 3 levels of rise or fall early on in the week, Tuesday, a lot of times Wednesday will just turn into a very consolidated day, which we actually just saw last week on gold. And then finally, and probably the most important piece out of all of this, because all of these steps 1 through 5 are irrelevant to me if market structure is not telling me that 1 through 5 is an assisting piece, all right? I need market structure to tell me, hey, market continue to go up or market will go down. By doing that, or by looking at that, the way that I do that is I use breaks in structure, breaks of structure to identify trends and reversals. These 6 points alone can help me to identify whether or not I will have a trade on Wednesday. Will Wednesday become a reversal, or will Wednesday become a trend continuation of Monday and Tuesday? This slide is actually from my previous video that was linked in that last slide, but this is very relevant for the rest of the backtesting and all of the slides that I'm about to get into right after this one. Some of these tips and tricks, they're more like guidelines going into Wednesday to help you identify what's happened on Monday and Tuesday, and then trying to identify what weekly template could be playing out in the week that you are trading. So some of these guidelines, these tips and tricks are: market closed on the outside of the opening range on Tuesday. The probability of a Wednesday trend continuation increased significantly, unless that breakout fails on Wednesday. So if market structure is telling you, hey, market go down, I'm going to go with that. And I'm going to say, well, this might be a failed breakout on Wednesday. But a lot of times that doesn't happen. It turns into an opening range breakout on day 3, and it could turn into a large parabolic move on Wednesday. Number 2, market close as a failed breakout on Tuesday. So maybe they break out of Monday's range and then they close back on the inside of Monday's range. That would mean to me that the potential for them to go back to the other end of the range goes up significantly. If Monday breakout fails, then Tuesday's breakout fails at the other end of the week. This is a high potential for parabolic trend trade on Wednesday. Imagine this. They go up to the high of the week on Monday and break out and then fail, and then they go down to the low of Monday's range, break out and fail. That will create a peak formation high, peak formation low, and I would be looking for a large parabolic trend trade on Wednesday. If Tuesday hits both ends of the opening range, the potential for parabolic trend trade increases. This is basically the exact same thing as number 3, except it's just a different presentation that the market will give you. Basically, if on Tuesday they spike the high and spike the low, the potential for a large parabolic move on Wednesday goes up significantly. Number 7, if the breakout on Tuesday closes 3 levels of rise or fall out of the opening range, the potential for a reversal throughout the week increases. And as I said before, it could turn into a fairly choppy day on Wednesday. You want to be careful of inside days or just narrow range choppy days, because they could be trapping volume up high and continuing the pattern or continuing the market template within the rest of the week. Now we're going to be going through every single scenario, every single template that I could find and easily identify within the past, I don't even know how many weeks, so that way you can see the reoccurring behavior of these templates. Throughout this video, you will notice that my opening range is this blue box, and it will be labeled opening range. Opening range is always Monday. The highest point within Monday and the lowest point within Monday will create the opening range. Now, on Tuesday, in previous videos, I have talked about the initial balance. Although that level is important, I have found that it is easier and much more replicatable to just look at where does Tuesday close and how did Tuesday behave to be able to identify what will happen on Wednesday or what could happen on Wednesday. So in this first example, and in these series of the next examples, this is going to be examples where Tuesday has broke out and closed on the outside of the opening range. There will not always just be one scenario to look at, and then you go, okay, that's the cookie cutter. It seems like people really want, like, this will happen, and then this will happen every single time, and that's perfect, and it's just going to work like that every time. That is not trading. I said on that little, in the beginning, 100% accuracy. The only thing that is 100% in trading is that the market will break out and trend, stay in a trading range, or break out and fail. That's all we know. We can look and see and identify behaviors such as breakout and potentially go into a trend on the day. All right, so we have a breakout, they failed, potential for them to go back to the other end of the range, except they already did, and they broke out. And now we've gone into a parabolic channel and capitulated down and began a trend down. Now, look at the beginning of New York session. They went up in 1 candle, 2 candles, 3 candles, And I understand that there is a pause there, but I typically do not count a pause as a push. But we have 1, 2, 3, pause, engulfment, time of day, 9 a.m., perfectly timed, right in the New York session for a low-hanging fruit continuation trend trade. Another example of closing on the outside of the opening range. Here is Monday, Tuesday, close outside of the opening range. Probability of Wednesday continuation goes up, but is not guaranteed, but we need market structure to tell us. So we look and we see, well, on the day itself, they have made a higher high. Okay, they made a higher high. That's all we know. And then they've came back down to the low, 3 pushes, gone back up, and attempted to make another higher high and failed, came back down. But right into the beginning of the New York session, they have created this nice little ascending triangle, exploded outside of that triangle, and continued. So coming out of a geometrical shape, after we've had a close on the outside of the opening range, we can now maybe react to the market saying, hey, this is a opening range breakout, and we are going to continue the trend. Here's another example of closing on the outside of the opening range right here. Wednesday continuation, high probability. But we don't know that for sure until we start having other confluences help us and assist us in that thesis. So on the day itself, we do have a lower low being formed right here in Asia. Then they went up and had a high of day sell-off in the London session where they did a 1, 2, 3 engulfment right into the London Open. And when they made a lower low down here, that is my key to look for a 1, 2, 3 back up into the high in an attempt to find a lower high being created sort of behavior. When they went 1, 2, 3 up into the high and using the time of day, 9:30, you have one hit, a second hit, a third hit. That is a triple top, micro triple top here on the 15-minute chart, as well as a triple top on a lower time frame such as the 1-minute chart. At 9:30, they did engulf this little structure right here, traded back up into it, and engulfed once again towards the 3rd hour of the session. Now, this also has done a measured move of the opening range. A lot of times on a trend continuation style of day, I will use a measured move style of take profit where I will pull my 100% expansions of the opening range itself from here to here. And a lot of times you will find that those are really accurate. Everything in the market is measured and timed, and I have found that this opening range provides really great range expansion opportunities on the day itself. One last example of closing on the outside of the opening range. Here is Monday, Tuesday, close on the outside of the opening range, and then on the Wednesday, the day that you would actually be looking to take your trade, they have made a lower low on Tuesday and pulled back and 3 pushes and began to break back down in the London session. You have a upper rectangle. They broke down. They pulled back once, twice, 3 times. Again, very similar to that oil trade that I just showed you, where this is a triple top of an upper structure. They broke down at 9 a.m. was the engulfment, and it was down through all the way down through the low of the previous day and down through the low of the current day to make that lower low on the day itself. Monday as an inside day within the weekly template could signify a few things. Usually, it will signify a large move within the week, but you also need to identify, of course, which direction that move could be. So, whenever you get a opening range inside day, and then Tuesday happens, you have to be aware of a couple things. Once they break out of that inside bar, there are stops at the other end of that inside bar, and if they do not break out, pull back, and continue, the probability of them breaking out and failing on Wednesday goes up significantly, and they may be breaking out and failing and going back to get the stops on the other side of that inside bar, just like they have in this example. So some signatures that could have helped you to identify this behavior are 1, 2, 3 pushes outside of consolidation. This is 3 pushes outside of the opening range on this Tuesday. They did actually close on the outside of this opening range on Tuesday, but immediately on the following day, they have now broken back down on the inside of that range and made a lower low right here. So this was a break-in structure. They made a lower low, they pulled back, and then they broke down at the end of the London session and started to do a parabolic channel right here. Another signature that could have helped you to identify this would have been this, of course, 1, 2, 3 up to the high, but the peak formation M at the high of the current week right here. This is a push, down, up, and then they engulfed. So this is like a shortened M at the high of the week. Very similar to the last example I just showed you, except flipped over. Now, this is US dollar, Canadian dollar. This Monday right here being the inside day. Now, Tuesday has broke out, and they've collected volume underneath that breakout level. And then on Wednesday, they have gone into a horizontal rectangle, and then they've gone into a parabolic channel right here, in which they broke out and went vertical in the London session, going back for those inside bar trader stops over here on the day itself. So how would you have actually identified, well, you know, where's this going? What's happening? I don't understand. Why is it going up and not continuing the move? It's structured. They started making higher highs and higher lows on the day, and they've gone into this channel. You have to be able to read, all right, they were going down. There's volume trapped, so that's kind of like a red flag number one. They could just keep going, and that's totally fine. But if they start making higher highs and this breakout fails before you even come to the session and you get an engulfment, well, maybe the idea is not that the market has decided to continue to trend down. Maybe it's that they have trapped volume down low within the weekly template, and it's actually a reversal to go back for the stops on the other side of the range. This is an example of a opening range inside day in which they actually decided to trend the market instead of reversing and trapping volume up high and reversing to the other end of the range. So similar to the other ones, there is an opening range breakout on Tuesday. Monday was an inside day. And then on Wednesday, the difference is they actually made a higher high on the day itself, came back down and went into consolidation right into the New York session where they engulfed, and then there was an opening range breakout. This is again range expansion of the opening range for 2 full expansions of that range, almost to the pip. Now getting into some examples of Tuesday being an inside day. Again, Monday, opening range, high and low. This one in particular was a fairly large range style of day. And then Tuesday has not hit either the previous day's low or the previous day's high, which means it's basically just trading inside of a trading range within Monday's high and low. Now, on Wednesday, whenever this scenario happens, a lot of times what I have found is Wednesday will become a reversal because the range is so wide and the volume is held up top in an area. You need to be looking for 3 sessions of rise or 3 pushes up into that inside day high or low. So if it was up high, obviously, if they're going 3 pushes up, or if they are going 3 pushes back down, either way, I would like to see a signature where they are pushing up towards that high, building order flow. So that way, when they get there, depending on what time of day it is and how the market actually reacts around this area, if I already have 3 pushes up and we get an engulfment back down, the idea is that, well, the stops are at the other side of that inside bar from Tuesday at a minimum. Another example of Tuesday being an inside day, except remember, I keep saying this, context is so important with the market, right? You have to look to the left just a little bit and just kind of look at what they've done so you can kind of make it make sense, if you know what I mean. There is a Friday where they've pumped up the market and then they've gone sideways between that low and that high for 2 days. They've been trading sideways in between that low and that high for 2 days. On Monday, they created an opening range. Tuesday was an inside day. And on Wednesday, they actually made a lower low right here. And then now they have pumped back up once, twice, 3 times, and then collapsed. But how would you have actually identified that? They made a lower low. They made a peak formation low, peak formation high. And then coming into the New York session, they actually traded back up into that peak formation high, failure to make a higher high. 1 push, 2 push, a weak third, but this is a M at the high of the session on the 15-minute chart. They engulfed right at 9:30 for that move back down through the low of the day, and actually a range expansion of the inside bar. If you've ever seen me talk about inside bars, you know that I will talk about measuring the high-low of the inside bar and finding targets. It's basically 100% expansion of that high-low range. Now, this is 3 levels of rise out of Monday's range on Tuesday. The reason I include this is because a lot of times it's less common, but this template will show up where they come out of the opening range in 3 pushes, 3 levels of rise, and then they will hold price up there in consolidation into the next day. And you have to be very careful about them either reversing on this Wednesday, or they will just go into consolidation between the previous day's high and the previous day's low in a choppy, tight range market. And you just have to be very careful about this template. All right, those are kind of 2 scenarios that can happen. This is a better version of the template where they actually performed a decent trade. But sometimes, like I said, they will just sit in a tight consolidation and hold price up high for either a Thursday or a Friday trade that will be much larger. All right, so we have Monday over here. This was an inside day. That part is very important to understand because of that inside day on Monday. But then on Tuesday, they've came out once, twice, 3 times, held price up high, broke down, made a lower low in the London session, traded back up into the high of the not only London session, but also the high of the Asian session, broke down, again, making a lower low coming into the New York session. And then on the 1 minute time frame, you would have found a decent entry. This is a up, down on the 15-minute chart. Obviously, finessing a better entry on the 1 minute chart is very important. This is a 10 a.m. engulfment after 9:30. And the thesis could have been that you're looking for inside bar stops at the low of the opening range. Moving into the next category of opening range style of trades, Monday, Tuesday, Wednesday, we have the failed breakout on a Tuesday. The failed breakout on a Tuesday lets me know that the potential for them to go back to the other end of the opening range is very high. So if we have a failed breakout on a Tuesday, I will look for places where it makes sense for them to either trap volume above a level so that they can move back down through that level later, or I will look for them to hold volume up high for a move back down towards the opening range low, kind of things like that. Of course, market structure is number one in my book, so I'm always making sure and watching for market structure to confirm my thesis. So in this case, I actually don't have it marked off here, but we had a low, a high, a low, a higher high, and then we made a lower low right here. So this could be our low. This is our high all the way up here. And we actually have a lower high down here that we could use for like end of day consolidation. Now, in this example, you can actually see them consolidating up above a level. This is them consolidating right above the opening range low, but they don't take it out, which is weird. All right. I always red flag that. I like to put little question marks across the bottom of my screen, kind of sarcastically letting myself know, like, they're building a retail false bottom. This is getting people to go long, and then very quickly, a lot of times you'll find that they spike down, hit the stops, and sometimes they'll actually reverse from that point. But at a minimum, they'll come down and they'll hit the stops, collect the money, and then do, whatever they're going to do. But by that time, your trade's already over. You've already made your money, and it doesn't matter what they do after that. So, like I said, failed breakout on Tuesday, consolidation above this level. You can see the larger pattern forming this 1, 2, and then on the third level, coming into the third level, we have 1, 2, 3 levels of rise, and then we have the engulfment right here coming into the session. Before the New York session has even began, they traded back up into that, and then the move back down. The market structure is already down. They made a lower low on the day over here, making this our lower high. And now, like I said, they've traded back up into it 1, 2, 3. 1, 2, 3 coming into a session. That's the perfect opportunity on the 1 minute chart to search for a pump and dump scenario. The pump and dump scenario being higher highs, makes a lower low, 3 pushes back into the high, and an engulfment to take that trade back towards the low down here. This is actually an example of an Asian session trade where they broke out and then they failed on Tuesday of the opening range, Monday, Tuesday, and they failed. And then on Wednesday, you actually get a parabolic trend trade in the Asian session to revisit the other end of that range. Notice they've actually consolidated once again just below a previous day's high. The previous day's high is the high of the opening range, and the trade back up through that area. Now, since the trade occurred in Asia, that's also valuable information because on Wednesday, the same concepts apply. Breakout and fail, breakout and trend, X, Y, and Z. So they've broke out and gone 1 push, 2 push, 3 push outside of consolidation, and then broke down, pulled back 1, 2, 3, engulfment right into the third hour, coming into the end of the New York session. Here is another example of where they have broke out and failed at the low of Tuesday, and they pulled back inside, closed. They actually had a break in structure on the Wednesday that you plan to actually take the trade. So again, context being important. It's not just about, it's not all about, oh, where did it close? I'm just going to take trading decisions based off of that. No, that's not how it works. Okay, you need to take a few other things into account as well. Look at the pattern. In this case, they did actually spike both sides of the range as well. So if you remember from the tips and tricks slide that I had showed you, that's one thing that I really like to see coming into a Wednesday, because that gives me the opportunity to look for break in structure, 1, 2, 3, explosive parabolic move. There was actually a 1, 2, 3 coming into the New York session as well. 1, 2, 3 engulfment, and for the continuation back through the high of the week on that Wednesday. But if you are trading in the in the London session, you could have looked at, okay, higher high. Let's take a look and see if we can identify where the higher low is going to be formed. And you have on the third push, you have 1, 2, sideways 3 engulfment. This is a down, up, down engulfment. That's an extended W at the low of the day, at the low of the week, at session timings. Perfect. 2 thumbs up. Great trade. So you have to remember that things are not always going to be perfect. All right. There is going to be times when you have setups that do not perform the way that you expect. In this case, they broke out on Tuesday, closed back inside of the range. You would be thinking, oh, volume trap down low. This is a breaking structure to the upside. We're going back towards the high of the range. Except on Wednesday, remember, the only 3 things that markets do: breakout, pullback, go into a trend. So they're making lower lows and lower highs on the day. Why on earth would I be going long? There's an opening range breakout confirming currently on Wednesday itself for making lower lows, lower highs. There's a 1, 2, 3 back up New York session, engulfment, and the move back down. My 3 favorite setups using the Monday, Tuesday, Wednesday templates are going to be the failed breakout of a opening range on a Tuesday, where I'm looking for that move to go back to the other end of the opening range, or whenever there's a confirmed breakout on Tuesday, and I'm looking for a parabolic trend trade on Wednesday. And last but not least, whenever they spike both sides of the range on that Tuesday, and I'm looking for a parabolic trend trade on Wednesday. Ladies and gentlemen, I do hope this video has been useful to you. If it has, hit that like button, subscribe to the channel if you have not already. Leave a comment down below. It could be anything. Mustache, nice shirt, sandwich, and you'll have a wonderful day.